Hello, I'm Tony Kaye. I'm the editor of Eureka Report, and today we're talking ETFs with Kris Walesby of ANZ ETFs. Kris, welcome to the studio.
Hello, Tony.
So, Kris, today I just wanted to talk generally about ETFs and what's happening in the ETFs market. What sort of trends are we seeing at the moment?
Well, at the moment, one of the key trends we're seeing, which is often talked about, is the higher usage of fixed income. So for a long time in Australia, most ETF usage was around equity usage and a little bit of commodities. But recently, some of the providers have brought out fixed income ETFs. And that's an excellent addition to the offering that's been out there, because fixed income should be 40%, 50% of any portfolio. So having fixed income there as well is a big benefit for investors. The other things that we're seeing, the key three things that I've been seeing is, firstly, a much higher usage of Australian yield ETFs as becoming a core part of SMSF investors' portfolios. So generally, the portfolios would be very stock heavy, and traditionally over the last 5 or 6 years, people will be using ETFs for international exposure, which is a good way to use them. But now, especially in the last sort of year, I've seen a lot more of the SMSF investors using a yield ETF, an Aussie yield ETF, as a core part of their portfolio, because they realise that actually picking stocks can actually be quite difficult to do correctly every single time. So last year you saw, for example, the banks went down during the course of the year. They went back up after Trump got elected, but they were going down for a bit, and then resources were going up, which is exactly the opposite of what everyone was expecting. So some SMSF, more and more SMSF investors realise that rather than trying to choose the sector, they pick one or two Aussie yield ETFs and put them in the core of their portfolio for Australian equities, and then pick the stocks around them.
So how do those Aussie yield ETFs actually work? What's beneath them?
So every single one has different ways that they pick the stocks. There are certain rules. No one's making the choices themselves. No one's picking the stocks individually, but there are certain rules for each ETF that every single fund has. So investors need to look at what the rules are, how they're picking each stock. But generally, they will be focused on making sure they get the highest yielding stocks within the Australian world, that have got good performance statistics. They're trying to weight themselves towards stocks that are going to pay high yields and therefore get the franking as well, with stability of returns.
So are they devised in terms of retirees in Australia who are seeking that steady income?
Well, I think they originally were, but what you're seeing is more and more people coming through, investors coming through, not maybe SMSF investors, but people like millennials who know that getting franking credits on top of a 5% yield, so let's call it sort of 6 or 7% total return, they understand that putting those into their portfolios also makes a big difference over time. But yeah, originally SMSF investors were what retirees were what they were designed for, because it means that if you've got enough money, you can actually have the income to live off.
Actually, when I looked at the inflow stats towards the end of last year, there was quite a bit of money coming into these fixed interest ETFs.
Yeah, so the fixed income is a really big growth area for that reason, because Australian investors know that they can buy into it and get the yield. Again, that's the same for the Australian equity yield products as well. It's all about trying to make sure that you use the money to give you a sustained level of existence, or to grow your portfolio. And by using fixed income, you can make sure that you're steadily accumulating rather than reaching for the stars in one quick hit.
Yeah. So, sorry to interrupt there, Kris. What are the other things that we're seeing in ETF Trends at the moment?
Well, one of the key things is within international. So international has been one of the biggest growth areas of ETF usage, especially with SMSF investors. But really, historically, what they did is they used international. Really, it was either global, ex-Australia, so really just a global ETF, which is fine, but it's very broad, or America and the rest. which is also understandable because America is the biggest economy in the world. But now what we're seeing is with some of those SMSF investors that are more used to using international ETFs, they're getting a bit more granular. So rather than just going global or America, they're actually saying, well, I know that Europe's big, I know that Japan's big, I know that Asia without Japan is big, etc. So rather than just picking a global fund where someone else is making those allocation choices for me, perhaps I have a view on Europe. So I'll take America, I'll take Europe, I'll take Japan, and maybe I'll make that 30% of my portfolio, but I'll allocate the weights myself rather than letting someone else choose those weights. So really the trend there is that people are getting a lot more astute on using ETFs for regional focus, and sometimes even drilling down to the specific countries.
Yeah, that's quite interesting actually, because investors just having all those different choices now allows them to be very discerning in terms of where they're parking their money or a portion of their money.
Exactly, and I think with asset allocation, where people have got they've allocated small amounts or medium-sized amounts to different regions, it makes sense to be invested in most of the main regions and just dial up or dial down depending on what you think. So if you think America's going to do well this year or this half of the year, or however often you rebalance, you dial it up, and if not, you dial it down with respect to the others, but you never really come out of any of them. You've always got an allocation somewhere because you never know which region is actually going to do well. It's only what you think is going to happen, and that way you're diversified across different regions. And then the last thing we're seeing is starting at the very beginning of people using ETFs a bit more tactically. So some of the investors I've talked about, which even 18 months ago wasn't really happening so much in Australia, where they see an opportunity. The obvious one is Trump getting in, and investors saying, I don't think that America will go up forever. I don't even think that America will go up much more than 6 months, but for the next 6 months or next 3 months, I'm happy to just use an ETF for America. I don't have any particular companies that I want to choose, but after 3 months, depending on how the market's going, I'll sell. It's a much more tactical usage. There's no long-term view there. The investor just doesn't really want to pick a company. They just think America's going up, I'll take that opportunity for 3 months and then sell. So there's a much more short-term usage of ETFs as well.
Are the returns there on the short-term basis?
They're definitely there. And actually ETFs were designed, when they were first designed, they were designed to serve two purposes: buy and hold or short-term trading. So that's why they became exchange traded, so that investors can buy and hold. And actually that's a primary usage across the world for ETFs, and that will never change. But there are a growing band of people, of investors, especially in the States and Europe, but it started to happen in Australia now, where they use ETFs for short-term tactical usage. And yes, I mean, the returns are there. The risks are there as well, though, Tony. I mean, with any short-term trading, you may think that America's going to go up, but it could go down. But I think the ETF is coming into its own as a vehicle choice to make those smaller short-term bets. So it doesn't just need to be buy and hold, although that will always be the main reason. But you can also think, actually, I think the US dollar is going to go up, but I don't know how long for. I'll just bet on that for 6 weeks, and I'll use an ETF, for example.
That's very interesting, actually, just seeing all the dynamics at play in the marketplace, and just the weight of capital coming into ETFs continues to grow. We're likely to see it grow further over 2017.
Yeah. I mean, for us, ANZ ETFS, we think that by 2020 it will be between 60 to 75 million. It seems that that's a far hurdle right now to get to, but the level of compounding is speeding up all the time, and then the number of products that are coming into the market is also increasing. So you've got two things there. So you've got like a supply element. There's more and more supply. So investors are looking at different opportunities, and then putting more and more money into ETFs. But then there's the demand side as well, and I think that Australian investors are very astute, and they're not. They're a lot more discerning about the fees that they pay, whether it be in superannuation, in their own management of superannuation through the SMSFs. And if they're not seeing active managers do as well, then a lot of them are preferring to use ETFs. And also back to my original point about direct stocks, many Australian investors are finding that their choice of stocks can be wrong. And therefore maybe use an ETF to make sure that you don't make, you're not as open to making mistakes as you might be. So all of those things are very positive for continued ETF usage.
Well, thanks very much for coming into the studio today, Kris.
Thanks, Tony.
It's been great having you here. We've been talking ETFs with Kris Walesby of ANZ ETFs. Join us again next time, and we'll leave it there. Thank you.